Private equity buys in big to product-led growth with a majority transaction over at Pipedrive. Hoppin raises $125 million as the virtual event space heats up, and Canva announces huge growth numbers. That and more on this week's PLG123. Let's dive in. Tab 1. Tab 1 is from TechCrunch and is about Pipedrive's majority transaction with Vista Equity Partners. Pipedrive is a player in the CRM space, and as a company, they've historically been focused on small and medium-sized businesses. Pipedrive has been on a great run and has raised capital from impressive SaaS investors like Bessemer Venture Partners and others. As mentioned, this transaction is with Vista Equity Partners, a large private equity firm that buys software companies. The article mentions that this is a majority transaction and points to the fact that Vista effectively owns Pipedrive now. Vista has a great track record acquiring businesses. Perhaps one of their most well-known is Marketo, where they bought the business for $1.8 billion, took it private back in 2016, and then 18 months later sold it for nearly $5 billion to Adobe. So Vista knows what it's doing when it comes to these big software transactions. And not only is this a majority transaction, it's also big in the sense that the valuation is well above $1 billion. The intel in the article points here to $1.5 billion enterprise valuation. Here's why this matters. Notably for our purposes here on the PLG123, Pipedrive takes a product-led growth approach to the CRM space. There are two litmus tests that I look at to determine if a company is product-led. So let's dive into those questions. First, who is this product built for? And the key question with product-led growth in mind is it built for an executive or is it built for an end user? The TechCrunch article speaks to that directly with this quote. Pipedrive's calling card has always been that it is sales software designed to serve first and foremost the needs of salespeople, not their managers. Built by salespeople for salespeople. And question 2 on product-led growth is, how is the product being distributed? There's a really quick test that I like to run here, which is just go to the company's website and see what the primary call to action is. If it says talk to sales or request demo, that's a pretty good indication that it's sales-led and not product-led. On the other hand, if it says try now or sign up here, that is a pretty good indication that it is product-led. And so Pipedrive has try it free as the call to action. You can very quickly get started and use the product. So it has that product-led self-service orientation in its distribution, so it checks the box for being product-led. So here's what to keep your eye on going forward. This is one of the first large private equity deals to buy a PLG business. And I understand why private equity loves PLG, because you can have both growth and capital efficiency, which many times means profits. So growth and cash flow, which is a dream scenario for private equity. So the big question then is, who's next? I expect that we'll see Vista and Thoma Bravo and other software-focused private equity firms increasingly targeting product-led growth, and we'll definitely keep an eye on it here at the PLG123. Tab 2. Tab 2 is from TechCrunch and is about Hoppin's $125 million round of financing. Hoppin is a startup in the virtual event space, which all of us know very well. Every event in 2020 has become a virtual event. So this space, understandably, is seeing some really big adoption numbers, and that is coming through in Hoppin's round of financing. It was led by well-known late-stage investors IVP and Tiger Global, and it was done at a $2 billion pre-money valuation. It's safe to say this is a huge vote of confidence, both for the virtual event space and trend, as well as for Hoppin as a specific player in that ecosystem. So here's why this matters. We're all well aware of the big companies that have benefited from the acceleration of digital transformation that's happened in 2020. We can look at the headlines and we can look at the stock prices for companies like Amazon and Shopify and Zoom, and we can see that benefit. Now, Hoppin appears to be one of the startup beneficiaries of the disruption of 2020. The company launched 9 months ago and is already at a $20 million run rate. You can see that monthly attendees to its events have surged from 16,000 in March to over 175,000 a month today. There have been big company events from Adobe and then popular public events like TechCrunch Disrupt that have been hosted on Hoppin. All of this traction has certainly been rewarded by investors. Year to date, the company has announced 3 rounds of financing which total over $170 million of capital raised. So here's what to keep your eye on going forward. To me, there are two huge questions. First, are remote events and virtual events still going to be a thing post-COVID, or are all of us going to be rushing back to hotel ballrooms and convention centers as soon as we're able? And second, if virtual events are here to stay, who's going to be the winning platform? Hoppin is clearly doing very well, but there are many others, including Zoom, who are logical competitors. You can certainly host events and webinars on Zoom, and Zoom has had a big push recently with its on Zoom launch. There are other startup challengers like Run the World, Brand Live, and many others. Tab 3. Tab 3 is from Canva and is their big new growth numbers and recent product announcements. Canva announced some key growth stats in this recent blog post. Specifically, they announced reaching 40 million monthly active users, and that's up from 32 million monthly active users, or 25% growth in just 4 months. This follows on the heels of some large financing events for Canva earlier this year, as well as their push into the enterprise. So here's why this matters. Canva is clearly making a big push both into design tech as well as marketing tech. To extend this lead, Canva has announced some big product features as well. There's a lot of new features around real-time collaboration for teams, which is kind of like Google Docs for your Canva assets. They launched whiteboard templates, which start to look a lot like Miro or Mural or Lucid Chart for mind mapping to address that use case and those sets of users as well. They also announced a thing called talking presentations. As you can see, this looks a lot like a presentation plus Loom, but in a long form context. So they're going after presentations and even asynchronous communication of it. And Canva even announced something they call brand kits, which is sort of a lightweight digital asset management solution, again, targeted directly at marketing teams to help them better collaborate with design teams to maintain brand consistency. One thing that's very clear to me from this is that Canva is taking aim at Adobe, most notably, and many other players at the same time with these aggressive product investments. Here's what to keep your eye on going forward. Will there be more competition between Canva and Miro and Lucid Chart and other players? And what will the competitive response be from Adobe, who's clearly got to have an eye focused on Canva as a growing competitive threat? Well, that does it for this week on the PLG123. Make sure to follow me on LinkedIn for more daily PLG content, and stay tuned for our weekly episode drops of the PLG123 coming at you right here on LinkedIn. Hope you all are having a great week, and take care.